What's going on, everyone? Today I'm going to be going over the checklist I used before I enter a trade, and your checklist might be a little different than mine, but there are definitely multiple checklists you can have. So I'll kind of be explaining what I mean by that. So I like to have at least 3 things in my checklist, and as you guys know, the classic 2022 model goes something like this. Okay, so you get actually I'll draw it with a brush, so it's easier. So if I draw this with a brush, it goes something like this. So we get a high, or higher high, higher low, higher high, which is the liquidity grab, and then we get a structure break into the fair value gap and then down again, okay? And usually you want to see the fair value gap right here, okay? And you want to see this fair value gap in premium if you're shorting and in discount if you're longing. So if we send this to the back so you can see, and then you also want a liquidity grab. So here's the liquidity grab, and we get this, okay? So this is the basic model, and again, you want to see it in premium as well. So if you draw the fib, you want to see it above the 0.5 if you're shorting and below if you're longing. So that is the checklist I use for now. And I like to have at least 3 things checked off, okay? So what I first do is I go to the 1 hour time frame. I see if there's any higher time frame fair value gaps, okay? So in this example, I woke up and last night going into this, I was bullish, but why? Because we had this gap up here, and then we also had untapped buy side up here. So I was bullish, but I changed my bias. Well, why did I change my bias? Well, we had a fair value gap down here that was... We bounced off of it, but you can see that we bounced off of it and we failed to make a new high. So that was bearish, and then we cut through it. So as soon as we cut through this in this candle, I was pretty much bearish till down here because this was the last possible place I could have seen us bouncing before we got up to this. So I saw that we were in a sell model. So if we draw the brush, you can see that kind of the sell side curve. And if you don't know what the sell and buy model is, go watch my sell and buy model video. So I saw that, and then what else did I see? I saw that on this dump with displacement, I saw that we created a tiny fair value gap, okay? And yes, we do have a fair value gap right here, but obviously this fair value gap on the bigger time frame is not quite in premium, so that's why it's not a good fair value gap, okay? But however, this one is. So you can kind of see that. So I first go to the 1 hour time frame or the 4 hour, depending on if I see a fair value gap in the 1 hour, 4 hour. Sometimes I might see in the 4 hour, but not the 1 hour. It just depends. And I did not trade this trade entry. This is when I go to the 1 minute or the 5 minute and I look for a lower time frame confirmation. Okay, and this is where I use my checklist. So when I woke up this morning, I see that we're down here somewhere, and I see that we rejected a fair value gap right there. So where do we always have to hit after we hit a fair value gap? Well, we have to hit sell side, okay? So my first target was here, and I thought to myself, well, if the target's right here, off of this, well, that means we're so close to this that why would we not hit this, okay? And that was my thought process going into this. And a lot of times what IC teaches is you want to draw the 0.705, 0.62, and 0.79 fib. So at this point in time, I saw that this liquidity was under the 0.79. So I was like, well, if we go this far, we're probably going to go this far. And it looked like the curve. So that's why I was bearish. So that's the first thing on my checklist I do. I go to the high time frame. I look to see if we're in a sell model or buy model. This was clearly a sell model. Some days it might not appear as clean as this, but this is what I do. So I go to the sell model, look for a high time frame setup. I saw we were in the middle of a higher time frame setup. I saw that we rejected here, so I thought to myself, we have to hit here because that's the target off of this. So that's when I go to the 5 minute time frame, okay? And this was the fair value gap that I had. There's also one up here, this 5 minute one up here, which would have been another short entry, okay? And then this was the part of the fair value gap that was unfilled, okay? And it was also in order block, as you can see this. It was an order block. So this is not where I enter, okay? This is not enough of my checklist. Yes, it's on premium, and yes, on the higher time frame, it's a fair value gap, and it's a fair value gap here. But again, that's only 2 reasons, okay? So what do I look for? Well, the other things I look for in my checklist are I'm going to write them down. Is there a market structure shift? So that's the next thing I ask myself. Is there a market structure shift? No, not yet. So I'm not just going to randomly short this without confirmation. So what that means is I'm going to wait for confirmation. I'm going to wait till we reject this and then have a market structure shift. Yes, you can just short this if you want, but again, you could have shorted this, you would have gotten wrecked, okay? Or you could have shorted this order block right here. You would have gotten stopped out. So it's better to wait for confirmation, which means go see if we get a rejection, and then if we get a rejection, see if we get a market structure shift, okay? So is there a market structure shift after we hit this point? So we have a higher time frame fair value gap, that's 1. We are in premium on the higher time frame, that's 2, and now we have to wait for a market structure shift, which would be our third reason for taking it, okay? So where do we get it? We get it when we break this, okay? And my fourth thing on the checklist is their displacement. Okay, so that's the fourth thing on my checklist. So in this situation, yes, there's displacement. Okay, so you can see how there's displacement here, and we have the market structure shift, and that's the other reason. Okay, my fifth one is there an FVG or order block. Okay, so is there a fair value gap or order block? This is kind of my third reason, or this is my fifth reason. So I like to have 3 to 5, but I like to make sure there's displacement, there's a fair value gap or an OB, and there's a market structure shift. Those are the things I look for. Sometimes if the higher time frame setup is not clean, I don't really look at it. I'll just play intraday setups like this. Okay. So in this situation, there's displacement. Was there a fair value gap? No, there was not on this time frame. Let's check the other time frames though. Okay. So yes, there was a fair value gap in here. Okay. So I would have set my limit right here, and there's also an order block supporting it, and you can see we don't get our entry. Okay, so sometimes that's going to happen. It is what it is. You can't really control that. So, but we do check off our checklist. Okay, so this would be a trade I would take because we have a market structure shift. We rejected a higher time frame point of interest, or a higher time frame fair value gap. Some of you guys know it is point of interest. And we also are on the 1 hour, the target would be hitting the sell side, okay? And like even in this situation, okay, if you look at this fair value gap, this looks like a good fair value gap to take, huh? But look, we reject it, but then boom, we literally just rebalance and you would have gotten stopped out. So that's why I want to wait for confirmation in the lower time frame after you see the setup on the higher time frame. So is there a market structure shift in this? Yes. Is there displacement? Yes. Is there a fair value gap or clean fair value or an order block? Yes, there is, but we never got the entry. So now you keep that in mind. The bias has not changed, okay? You still are targeting this, so you can just look for the same setup, okay? So what I will say is there is one more thing to check off the checklist, which is a liquidity grab. Is there a liquidity grab, which means was buy side hit or was there equal highs that we went over and dumped over? You want to make sure liquidity grab is there. Sometimes if it's a continuation, sometimes the liquidity grab happened way before. For example, on the 1 hour, on the 1 hour in this situation, we ended up wicking down into this, and then up here on the 1 minute, there weren't too many liquidity grabs when we wicked up here in the 1 minute. But we know in the higher time frame we did hit sell side, so it would make sense to go long even though there's no liquidity grab. So that's kind of something to keep in mind. So because we never got the entry here, you just look for another entry, okay? So let's say you are a trendline trader, okay? Let's say you see this trend line. Well, you know the target's here, so what happens now? You wait till we break below this trend line, okay? And we ended up breaking below. We never fully hit the target, and then we go back above. I'm sure we didn't close on this in the 5 minute, but what do you notice here? We get our market structure shift here, so we get another one. Is there displacement? Yes, there's displacement. Is there a fair value gap? Yes, there's a fair value gap right here. Okay, and it does line up with a mitigation block, which is right here, this candle. And this is kind of extra. If there's a breaker or mitigation, I can consider that extra, but it lines up. Is there a fair value gap? Yes. And then the other thing was, is there a liquidity grab? And in this situation, I would say yes. So technically over this, like this, going over these highs was the liquidity grab. And because we went over these highs and then we rejected a higher time frame interest or point of interest, this is kind of more of a trend continuation in this sense, okay? Obviously, we don't have like a smaller time frame liquidity grab, like going up here. We don't break these highs. But I would argue that because we rejected a point of interest on a higher time frame, this would be more of a trend continuation play. So, yes, there's liquidity grab. It's just over here. And then is there a fair value gap? Yes. And then is there market structure shift? Yes. So it meets everything in our checklist. You can only take this if you know we haven't hit the target from the higher time frame. Where's the target? The target would be right here. So let's say you enter here and you see this wick, you get stopped out on this wick. Obviously the stop would be here, but some people will tighter stops. Well, you're still bearish, okay? You're still looking for an entry, and we might not get it, but that doesn't mean you give up, okay? You keep looking for the entry. So what else happens? So let's say you wake up in the middle of the day and you just see this fair value gap and you have no idea where sell side is. Well, this is your confirmation, okay? So we get another setup here. So sometimes if you don't take the first setup, but you see where you reject, that might mean look for like a confirmation setup, which means a setup right after we get this setup. So in this situation, we have the market structure shift here. Do we have displacement? Yes, we have displacement, and by that I mean like there's an energetic break in this. So that's really good. We have displacement. We have the fair value gap, which is a pretty clean one, and we have a clear liquidity target. And I did forget to mention this, but I like to make sure that it's in premium, and both these setups were in premium, as I talked about in the beginning of my video. So if we draw the 0.5 fib from here to here, you can see it wicks right above premium. So this fair value gap isn't premium. We do get displacement, and we know we haven't hit sell side over here, down here yet, okay? And the fact that we came so close to this means we probably will likely hit it eventually. So that's when you look for a short setup, but you might not get the short setup. So we had clear displacement, we had a clear fair value gap, and we know we hadn't hit sell side yet. So this was the play. It checks off like 6 or 7 boxes. It checks off it's a premium, there's displacement, there's a fair value gap. We rejected a higher time frame point or higher time frame candle. We have like a smart money divergence here. Not a divergence, but we have a higher high and then a lower high, which is SMT, if you've studied that at all. So there's lots of reasons to take this short. In a NAS, the same setup happened, if you look at NAS. But those are kind of the 6-7 things I look for in my checklist. 6 to 7 is a lot. I would say there has to be at least 3. I think the most important thing to kind of remember after watching this video is so I'm going to write them down. There must be clear liquidity we have not hit. So you must be confident that we're in like a sell model or buy model, and you have to be really confident we haven't hit the liquidity yet. So in the picture I showed you guys earlier, the curve, you can see we never hit the bottom yet, but we broke through the bullish fair value gap, so I figured we would. So there has to be clear liquidity we've not hit. There has to be displacement. There has to be a fair value gap, and you could use an order block, but I prefer using order blocks for like stop losses. There has to be a fair value gap. There has to be a market structure shift. So there might be displacement on some of these setups, but there might not be a market structure shift. So you have to make sure it breaks the last obvious higher low or a higher high if you're bullish, and it has to be very energetic and go far. So there has to be these 3 things. There must be clear liquidity we've not hit. And then other things you can add to your checklist is maybe you only want to enter at the 0.705. So 0.705, optimal trade entry, must be in premium if short, discount if long. These are other things you can add to your checklist. And the chances of you succeeding in a setup with all these checked off are very, very high. So this is like an A++ setup, but if you just want an A+ setup, I would look for at least 4 of these. And the one thing being, I would always make sure there's displacement, there's a fair value gap, and there's a market structure shift. And you must, sometimes, if I don't know what liquidity is, I'll just base my thing off of this and I'll sell internal liquidity, which means the reset swing high or swing low we just created in that second. But I like to know where there is liquidity. But again, sometimes if I don't, I just play the smaller time frame internal. And then these are stuff you can kind of add to your setups. Okay, so sometimes I will see we haven't hit liquidity yet, and I see a fair value gap, but sometimes the fair value gap might not be in premium or discount wherever you need it to be, and we reject it anyway. So sometimes you'll miss plays doing these, but I guarantee you if you add all these to your checklist, you will be very, very profitable, and these will work the most. Okay, so that's kind of what I have for now. Let me know if you have any questions. I do have a Discord, and Patreon month is ending in a day. I think I have 21 or 22 wins and 2 losses this month, so pretty good. Feel free to join. There's a link in the description for my Discord. You could just DM me. But I learn all this stuff in live time usually. But yeah, hope you guys understood this video. I tried to make it as simple as possible. And other than that, enjoy your day or night or whatever time it is for you. And I'll see you in the next video.